introduce to you our first speaker of the day, a family business advisor and investment banker who's the founder of Drona Consulting, talking to us today about unlocking value and creating wealth. What are your options? What are your opportunities? We have Mr. Arun Dayanidhi, a pioneering business transformation coach dedicated to converting traditional family-run enterprises into professionally managed corporate powerhouses. And with over 17 years of experience, he has developed a unique what-not principle and a chessboard strategy to help businesses scale sustainably. As an architect of Bharat Vision 2045, his mission is to transform the 1,000+ family businesses, growing them 10x and contributing 1% to India's GDP. Everyone, please put your hands up for the Rajguru in business, Mr. Arun Dayanidhi.
Thank you, Srivatsava, for this opportunity. And I think I was here yesterday and I was listening to a lot of things about cashews, the future, the present, the challenges and everything. And one thing I also understood, thanks to I was visiting Mangalore and we did a couple of sessions for a lot of cashew people in Mangalore. One thing we understand, this industry is not simple like almond or pistachio. Right? It's one of the most complex process. But at the same time, do we really get the benefit of the complexity? Of course, we aren't. I mean, it's a tough job. Whereas pistachios or anything, it's just a kernel and break it and you'll make your money. But we also understood, as a company, there are a lot of challenges which is also outside in nature. It need not be only very limited to the industry. There are a lot of other challenges because we are part of the Indian model. So what's happening is India is itself changing into a different mammoth already. From here, if you look at it, at 2020, we spoke about an SIP inflow of money into the country at around 5,000 crores. At 24, India has grown 5 times to 25,000 crores a month only on SIP. So it means if you look at otherwise, you would have seen the finance minister talking about the reduction of FDs, fixed deposits, and where the money is going. All the money is going to the capital markets. So this is a clear sign of how the whole market is kind of shaping into a very, very large and very powerful economy. These are the signs, right? The FD reduces, the fixed deposit interest rate comes down, and SIP increases, mutual fund increases, then it means the money is getting into the capital market. When it gets into the capital market, there's an amazing opportunity for anybody out there. And also there are a lot of challenges, companies who don't adopt to it. I think this session, it's a 20-minute session, I've shaped it. And it was supposed to be a 40-minute session. I trimmed to 20, considering the timeline. And we're going to talk about how are we going to unlock the value and how to create wealth. Okay, we all running large enterprises. Right? We might be traders, we might be processors, we own brands. But how am I going to create wealth? In those days when 70s and 80s, when we all started the business, the margins used to be anywhere between 25 to 30%. So in that time, our grandparents and parents were able to do 10% for themselves, 10% to the business, and 10% for creating wealth. Right now, if you look at 30, 40 years from after that, our margins play less than or single-digit margins. But how do we create wealth with the single-digit margins if these continues to grow for the next 10 or 20 odd years? So that's what we're going to cover. So I'm a family business advisor and an IPO strategist. So let's go for the reality check. So India's GDP at this point stands at 4.1 trillion American dollars. And surprisingly, the nuts and dry fruit market in India is also $4.1 billion. So it was easier for me to compare. It's 0.1% of the India's GDP is fruits and nuts market. This, of course, cashew plays a major role also in it, but also the other dry fruits. As also because it's very tough to classify cashew as a separate entity in consumer. So we've taken this. So it means we are 0.1% of the market. But if you look at 10 years back, GDP versus India, we were 0.02. It means we have drastically grown, 5 times the market has grown here. And likewise, India is expected to be a 30 trillion American dollar GDP by 2047. At the same time, nuts and dry fruit market has to be at least $30 billion, considering the same 0.1% India's GDP. If you have to maintain the same area, it means from 4 billion in the next 22 years, the market has to at least become 30 billion US dollars. This is the prediction. But sometimes it could be even more than that because 30 billion at a pegged value of 80 puts you around almost 2 lakh crores. It's a phenomenal market. But if you look at if 150 crore Indians, out of which even 10% starts eating this is just a number. I mean, the number could be even 70 to 80 billion dollars. So India is going to be the biggest consumer of dry fruits in the world in the next 20 years because every kid who is not eating today, right from my kid who started eating cashews and dry fruits than chocolates, I think this is going to grow into a multi-large companies. So one good thing is that we are growing, but growth also comes with challenges. So at 2047, all right, at India at 100, we have to maintain 6% growth for next 22 years just to achieve what the $30 billion of market that we want to capture. So it means if it's a $30 billion market, it is also possible that billion-dollar brands can come out of this industry. Multi-million dollar, $100 million, $200 million companies can easily come out of the industry because it's not about you, the market also pulling you up. If I say 10 years back, if the Indian market was greater than export, probably a lot of people would have not believed it. Right? Today, cashews, India market fetches better price than the export because consumption derives demand and demand derives the economy. So if you look at it, if we have to maintain 6% growth to be a $30 billion company, it is impossible to grow without equity. We cannot grow without equity at all. Then what will happen, or we will become irrelevant to the industry. Probably we will be with debt, we will be with structures, and we will not be able to grow the business in a way that we will be able to grow. So 2035. So what is the expectation of the capital market by 2035? Minimum 30 crore Indians will invest in equity. 30 crore Indians, that is just 20% of India will be on equity, which is already in equity after the 2000 recent elections. I think there are almost 11 crore Indians have joined the capital market. So 30 crore Indians joining means, for example, by 2035, the market will touch 100 lakh crores of asset under management. It means currently the market is only 40 lakh crores. And 50 to 20 lakh crores is expected to be infused every year as fresh equity into the market. And SIP alone, that is systematic investment plan alone, will be 12 to 15 lakh crores. You're talking about because right now there is a baby or kid born today, the family puts an SIP for next 15 to 18 years till they go to college. See, that is whenever Indians, the middle class gets into a safe model, that becomes an economy of power. They went into gold, they went into FD for the last 30 years. That's why the Indian banking system and the gold became the most powerful business model of India. Now, if you look at it, the same families, they are trusting mutual funds, SIPs as a next alternative because they think 10 to 12%, no other investment is getting them out. So it means when 30, 40, 50 crore Indians believe as a safe product, that safe product becomes an economy by itself. That's exactly happening in the capital market because if you look at it last 10, 15 years, the mutual funds have performed at 15 to 18% consistently, which no investment has given them back. And real estate is also becoming very unaffordable to common man in a lot of cities and even tier 2 towns, tier 3 towns. So the only way for a common man is to invest in the capital market. The reason I keep telling this about the capital market is because this is going to impact every walks of our industry. Whether I may be cashew, dry fruit, or any industry I'm talking about. I could be an engineering company. As long as I'm a part of this Indian economy, right? I don't think so. This economy plays a major role. So what will happen if I'm not taking equity, if I'm not part of an equity, okay? My competitor or a corporate which has the power of equity, right? He will kind of come and take my market. For example, I'll ask somebody a question. So if you got a 50 crore in your hand, That's what you've earned in your life. And somebody asks you, there's a great opportunity to build a brand in this cashew space, like Family or whatever it is. So what's the money that maximum you'll put from your pocket? If you got 50 crores, how much you'll put in a brand? 1 crore, which is 0.2%, right? Because it's your hard-earned money, you cannot just lose it because somebody else is doing it. If you have the same 50 crore as an equity, which is not your money, public money or private money, how much you'll invest? You're convinced about the idea of brands. How much you will invest, sir? Out of the 50 crores, which is not your money, 15 crores. Okay, just imagine your money at 1 crore, and if it's an equity money, you put 15 crores. So at any given point of time, a guy who's got a free cash flow and a public equity will beat you 15 times better than at your market. So same ideology, but when we look at our money, we become extremely constrained because it's a very hard-earned money. But I'm not telling we are playing with public's money, but public money gives you the freedom to take the risk that you took when you have nothing. But if you ask when you started your business, you would have risked everything to build a business. But when you become a 50 or 100 or 200, 300 crore, you have got a lot of things to lose. So the risk appetite goes down, your protection comes back. But the beauty of any industry is safe is the risk is safety, right? So far we all manage without equity, it's all fine, okay. But now the economy is changing in a massive way. We can't afford to remain silent where we are today because we will be killed if we don't change, because I'll probably explain how this will work. So if you have to survive this industry with so much of competition from brands and venture capital, private equity brands, you have to maintain a 10% PAT. If you want to build a business and also create some wealth for the kids in the future, coming years, you need to at least have a 10% PAT in your operations. That is profit after tax, after depreciation, after paying taxes. But if you have to thrive into a larger business, become a conglomerate, you need to at least perform it. Your PAT has to be nothing less than 15%. But the reality is, can we make 15%? But the reality is, if we don't do it, we can't create wealth, we can't become a very powerful business houses. That's the reality. Because the market, it's entry for anybody. Anybody can get into this industry. They cannot process, but they can buy and they start selling. They can also make bigger money. They can also control the markets. So eventually, this is the hard reality. If we have to survive as a country, survive as a business, this is the same for any business to grow. So it means, how do we generate extra cash flow? Okay, who will win this 22-year game by 2047? Who will survive or who will win this game? The one who can run with free cash flow. A lot of people say we have profits in the books, but when I go and see the books, there's no cash in the books. But it's profit because the money has not come or the money has gone to something else. And we all believe in assets, right? We all believe in assets to see machines and buildings. We see that as the assets, but they also kill the depreciation. That depreciation also kills the free cash flow which is in the company. We always been advised, oh, depreciation is good because you save a lot of money. But what point in business, when we don't have money to grow the business, what point of saving the money? It's in an oxymoron. And the one who can run with free cash flow will win this game. The one who can build a brand, who can fetch extra money. For example, you're buying a cashew at 800, selling at 850. And with all things, you have a left with few chances. But at least if you're a forward integration brand, you'll be able to earn 100,000, 2,000, 200, 300, where a kilo you can earn more than 100 or 200 rupees. The one opportunity is you have to build a brand. There is no option because people want to buy something which is packed well. I know for sure I go to Lulu, I buy a cashew at 800 rupees bulk. But a common man, sometimes we always get blind by the brands. We might have a small 100 grams or 200 grams, even we buy for 200 rupees. So technically, calculated cumulatively, we spend around 2,000 for a kilo over a period of time. But it doesn't matter. End of the day, it's convenient, it's brand, I'm okay with it. And India is becoming a consumer-driven market. 40 to 50 crore Indians will derive the consumption. If you look at it, any country which has got consumption heavy has ruled the market. Look at US is a consumer heavy market, China is a consumer heavy market, India is going to be an extraordinary consumer-heavy market. So it means brands will control the whole market. So based on brands, the entire processing, the entire production will be controlled in the future. At least next 5, 10 years, this is going to happen. The one who can automate the productions, one who can automate the entire process, less dependency on people. The one who can attract, the most important point is, the one who can attract and retain talents. So if you have to grow, you cannot build a building without a pillar, so you can't build any large businesses without very powerful, strong people. So it means in tier 2, tier 3 towns where we are operating from, it's extremely hard to retain talents. Just imagine, unless you are public limited, right, you are known across India. It could be small, mid, or large companies. But how do you even attract talents? You can't hire an agency and say, hey, I'm a big guy in my place, can you somebody? Nobody was willing to come back to tier 2 towns unless until they know they get something apart from the salaries or whatever they get. Okay. Consolidation and corporate structure is the only way forward to build great businesses. It's engineering or cashew or whatever name it. However, this industry could be from cottage, you become an automated processing industry. If you have to survive this industry and make at least 7 to 10% or 5% margin, you have to consolidate and you have to become a corporate. That's the only way you will be able to go forward. Okay, one of the reasons, there is a lot of opportunities like private equity, IPOs and everything, but somewhere I always insist on IPOs for tier 2, tier 3, tier 4 towns, because sometimes a family-owned business, right, their mindset may not gel really well with a private equity investor who is actually a banker, who sits on the board, and sometimes it's very tough to have somebody equal to the family sitting in the board and telling us what to do, what not to do, and over a consistent period of time. It's extremely difficult, but that's why I've only seen a lot of private equity players have kind of not performed really well in a small towns. In IPO, the money is given, and you are only questionable when you don't perform. So they give, like a banker, they give you the opportunity to perform on yourself. Nobody comes and really sits in your board and tell what you're supposed to do and do. So this is that comfort. So there are two options in IPO. That is, one is called SME IPO and main board IPO. SME IPO is for companies. India has relaxed a lot of rules and regulations and said even companies with few crores of 1 or 2 crores of cash flow in the last 3 years can comfortably get into IPO and not report every quarter, rather report it every 6 months. They relax a lot of rules because the reason why Indian government is doing is they're expecting there's going to be a volcano of money coming into the capital market. Especially SIP, if anything is invested, that money has to be invested back exactly within a month in the capital market. They cannot go anywhere. So India is seeing that if you don't get a lot of companies coming in, this capital which is pooled cannot go to smaller firms. It will only go to powerful corporates and make corporates even more extremely powerful, 10 times from here. So people always, is a misconception that IPOs people do only for money. That's a very wrong notation. And people think I have to be become big, a sub 1,000 crore, sub 2,000 crore company to even qualify for IPO. See, there are multiple, India is a market of small and mid-cap industry. We are not a large cap industry like America or China. If you look at being a small cap, you should be into IPO when you see next 5 to 7 years, you're going to grow massively. You're going to have a tipping point in a business that exactly when 5 to 6 years before you should be in IPO. Because entry value into IPO is calculated based on profit after tax. So the valuation really doesn't happen when you're outside the IPO. Once you get into the IPO, you spend a lot of time, you continuously prove that you are worth investing in, and your valuations are skyrocketing. And no industry you will never create a wealth like how you can create. For example, employee participation retention. In these tough times, even to retain an employee, okay, your salary is not enough. If we get into IPO, we have something called employee stock option and also a shareholding pattern. If they perform certain tasks, if they stay for certain years and they perform, automatically certain shares go to them. So it becomes their firm. If you want to build a 1,000 crore company from 100 crore guys, you need at least 5 to 10 people thinking like you, working like you, and thinking it's their own firm. And nothing, IPO gives you the power and to retain people, because without talent, I'm telling you, you will not be able to grow in the next testing times. Alternative source of fund, fund is always about debt and your own money. Sometimes you don't know how to de-risk. The market may not always go. You would have heard stories where people are those family used to be great when the company went for a bankruptcy or something bad happened to the family business, the entire wealth have gone and they become insignificant. But if you look at people you're getting into IPOs, you are de-risking your wealth. That is, company is different, your wealth is different, right? The future is, all the money comes from the business, goes to the business. And all the valuation comes from the business, goes to the entrepreneur. This is the only way that you will be able to make great money in the coming years. So even look at it, tax benefit on capital gain. Whatever shares you sell, you make only a flat 12% tax, just like Singapore. Any other models of assets, you need to pay more than 25, 30%. If you sell a share of your equity, it's just 12% flat tax. Then it improves corporate governance, right? End of the day, you become, if you are to be disciplined, it will always give results. People are always away from results. Liquidity to all stakeholders. Anybody coming to the business, any given point of time, your family wants to dilute your shares. They have the power to dilute. And you avoid a lot of problems in family also. Of course, your contribution towards the economy because you're creating more employment. And you change from a closely held to an investor-driven company. An investor-driven company will always help you to grow into a very powerful company. And if you want to create long-term wealth, this is the only option available today. And you get listed, everybody starts seeing you across India. Your brand becomes a very powerful and path towards wealth creation. So it's just not about money, and it's all about building great businesses, building governance. So I will always equate IPO with marriage. So marriage is a commitment. Till you get committed, 8 o'clock you have to tell you're coming to dinner or not. You keep reporting, right? IPO is same, whatever we do, but here at least we report every single day in marriage. In IPO, we report every 3 months or 6 months in quarter. So reporting is the key that brings a lot of discipline. That's why people say if you're reckless, they will say, get him married, he become a good person. Because reporting, discipline makes you aligned to your life goals. That's exactly what I'm telling. If you're not scared about marriage, I think we shouldn't be scared about IPO also. So if you ask me, yes, SME IPOs have performed. Yes, phenomenally. Out of the 1,300 IPOs happened in SME in the last 10, 12 years, 300 IPOs have migrated to main board. It means 30% has performed really well and grown, and this has never happened in the history of any small IPOs in the world. Let me quickly get through this opportunity. I want to compare two opportunities of how wealth can be created here. Probably I'll take 3 more minutes, 5 more minutes, Shivatsava. Good. So Krishival Foods got listed 3 years back in IPO. For example, for people I want to understand, okay, this is not visible. Okay. So in IPO, they call it as market cap. Value of your company is called as market cap. So Krishival's market cap is 881 crores today. And their share is trading at 395 rupees. Good, minus 10 is all okay, it happens. This is the most important thing. It's called PE. Stock PE means what is your profit after tax and how much multiple the common man or the corporate is willing to give for that private equity. So for example, his profit is 14 crores. Out of the 202 crore revenue that he's making, his profit is 14 crores. So 14 crores into 65.1 gives you 881 crores. This is phenomenal because a lot of players in this market has not got listed. That's why this P, normally it's always 10, 15 and 20 P multiple. And look at ROCE, it means they have performed decently well. ROE is also different. So just imagine 1 crore PAT is equal to 65 crores. So 1 crore I show, I get, market gives me a 65 crore valuation. But without that, you are playing with 1 crore is 1 crore for you. Here 1 crore is 65 crores. Just imagine he touches 30 crore PAT. Say by 2029. I'm not sure whether they're doing it, but if this is the case, their valuation will be with the same 65 crore multiple, 1,950 crores will be the valuation of the firm in 2029. If they hit 50 crore PAT, probably in 2032, the company's valuation will be 3,250 crore without altering the PE multiple. Just imagine from a 14 crore in the next 7 years, I grow slowly and book a 50 crore PAT. I can be just a 3,250 crore company. Even if you consider the family as 50% of stock, they are worth 1,850 crores. They can dilute 200 crores in the market paying 12% tax, which is 24 crores. They can take 176 crores back into their account in less than 1 day. Tell me, can you dilute your 200 crore asset any given point of time and get the money in less than 1 day? Liquidity is power, and that power gives you build great businesses. This is one example in your industry. Probably the next one is Proventes Agrocom. If you look at it, their market cap is 338 crores. The stock PE is 45 times, 45.9 times. But out of the 580 crore revenue, their PAT is just 9 crores. Probably they're getting to the PAT model, it takes time. But just imagine if they hit 30 crore with the same thing, you're talking about 1,377 crores by 2029. Another 7 years, if they touch 50 crore, they will easily hit a 2,500 crore. I'm not considering the market's growth, like post-COVID growth, or the market itself will double into a triple economy. I have not even considered. Right? Just imagine, this is the beauty of IPO. This, in your life, you will never be able to create this kind of wealth. Because why wealth is important is because to protect your existing business, to protect your family, to de-risk the business, you need to put all your money back into business, then you grow with this. Finally, I want to take this example, and I want to close this down. KPR is from my city, Coimbatore, and this is one of the finest examples. If you look at it, okay, the company market cap is 42,304 crores, okay? Last Tuesday, they were 31,000 crores, okay? I'll tell you, this is a perfect example of a company which didn't invent a lot of things. They did textiles, they did sugar, they did everything. When they went into the IPO in 2009, so if you look at it, they went into 2009 and 16 rupees was the share value. When a lot of companies, big fours or big fives tell, go to IPO, only you become a 3,000 crore company. Just imagine this company went at 16 rupees a share and the share went to 9 rupees and they continuously performed, and today the share value is 1,240 rupees and in 4.3 rupees in 2008. The entry PE was only 9. When they came in, they gave only 9 times value. They kept performing, kept booking profits. Now they are giving 53 times, which is the highest in Indian textile industry. Nobody enjoys this profit. But they waited for 14 years to get here. The family is worth 28,000 crores in 16 years post-IPO and will be worth minimum 50,000 crores by 2028 and 1 lakh crore by 2035. They just diluted last week around 4% and they took 1,600 crores to the family, paying just 12% tax, and they're building IT parks and IT firms here. Just imagine what kind of wealth. Just imagine if the family has not gone to an IPO and their 2010, their PAT was 50. I've taken the old data. 2025, their PAT is 850 crores. Simple, good business. They put all the money into the business. They waited for the equity to perform, and it took 10 years from 500 crores to become 5,000 crores in 10 years in IPO, and 5,000 to become 16,000, it took 2 years. From 16 to 20,000 took 1 year. From 31,000 to 42,000 crore, it took only 2 days. So this is the power. It's not a gimmick. It's not some happen. You have to go, when you're small, you go into IPO, you explore, go and perform for next 5-10 years. Make a lot of money for the investors who come into you. I'm telling you, nothing can stop your business, and you will be rich, you will be wealthy, the business will continuously grow. You need external equity. I talk about opportunities, everything was fantastic, all good, but we also have challenges. I quickly run, probably we will take it off the tower, but so the biggest challenge is, the reality check is, you're all part of family businesses. Only out of 100 businesses, only 20 business successfully cross first generation. Only 10% crosses second generation. Only 4% crosses third generation. This is a global market. It's not even Indian market. It could be much lesser. The biggest challenge is, can you consolidate your family businesses to take these kind of decisions? And we call it as 9 sins. Quickly, family conflicts mismanagement is the biggest challenge that will before your eyes. Bad succession planning will ensure your business cannot grow. Nepotism, just you always think your son and daughter has to run the business, not professionals. It's going to be tough. Unqualified leadership. After some time, we also become an unqualified leader for building a 1,000 crore company. Can we hire leaders who can run this firm? If you don't define the family roles and responsibilities in business, ignoring generation conflicts between father, son, uncle, chacha, if you don't figure it out, this business going to have a lot of tough. Not taking help from professionals. Professionals will build your company. Hesitation to change old practices when your practice was formed when you make 30% PAT or 20% profits. Today the profit is 5, 6 and 7. You cannot hold on to the old practices anymore. And too much reliance on real estate and bad wealth management. You put all the money back into real estate, you will have asset. Trust me friends, you will not be able to liquidate. Power of money is in liquidation and that comes from equity. And if you could figure this out, you can figure out your industry, you can figure out your IPOs, you can figure out your wealth management. I think, you decide whether you want to be Fiat Padmini, Bajaj, Rajdoot, which is not there in the picture, or do you want to be Bajaj who kept changing, kept into equity, now they are a 10 lakh crore company, whereas everybody else has gone out of the market, who used to rule the market. This is the reality. And I end the conversation with, so many people die in bed because they stop moving. If you stop, you are dead. If you slow down, you are half dead. Life is a movement, and IPOs, equity gives you the movement to be relevant. And in my own Tamil tongue, we always say, Nirpavai Velum, Naharbavai Valum. It means what keeps moving will live. What cease to move will die. And that is, the world is ruthless and the world is full of opportunities. Thank you so much. Have a good day.